I think it's time we finally audit the Fed. Welcome to this week's Texas Market Snapshot, where I break down the latest in rates and real estate, help you stay ahead of the curve and win in the Texas market. Now, this week, it is Jobs Showdown, Fed versus inflation. The Fed meeting concludes today at 1 p.m. It's Wednesday, and that's before Friday's jobs numbers even hit, which is a big deal and unfortunate, but it is what it is. So let's think of this as a three-round fight. Round one, the Fed. Over the last decade, they have been reactive, not proactive. They denied runaway inflation until CPI hit like 9% in June of 2022. Then they slammed rates up by 500 basis points to 5.25% in just 16 months. That's the fastest tightening since 1982. If you go back, remember after 2008, there's zero rate policy and over $4 trillion in quantitative easing distorted markets for years. And now today, with inflation cooling near 2.7%, they remain stubbornly high, about 5.25% to 5.5% is the Fed funds rate. And it's one of the highest in the world. Critics are calling for audits and accountability. And honestly, it's about time. Round two, jobs data. Now, unfortunately, again, this won't influence the current Fed meeting, but Friday at 8:30 a.m. brings the next jobs report. Slower hiring actually gives the Fed some cover and saves face to allow them to ease rates at their meeting in 6 weeks. Strong numbers will feel good, but it could blur the prospects of rate cuts. Honestly, whatever prints, it's going to be suspicious until next month's revisions. Lately, these reports are ridiculous. They're missing jobs by like 100,000 estimates a month, 100,000 jobs a month, They're about as believable as the alibi of a CEO at a Coldplay concert. Sorry, I couldn't help myself. And let's hope that changes, okay? Now, round three, inflation. Cooling price gains pave the way for real affordability, more buying power, better terms, smarter deals. Across the ring from the Fed is Scott Bessent and President Trump, and they're pushing some massive trade deals. We've seen them. Debt control moves, growth initiatives to tame inflation without tanking the economy. And I am rooting for them. I hope they're right. I hope they succeed, because if they do, it would be great for the economy, and the Fed could finally loosen up, clearing the path for lower rates. Here's your game plan no matter what. Listen to the Fed's statement this afternoon for any hint that they're softening their stance. Get fully fast-track approved now. That's clear to close except for appraisal, okay? Because regardless of your buying timeline, being ready to make aggressive offers and close fast gives you the edge while the rest of the market is still on the sidelines. Leverage today's market. Median home prices have dipped, inventory is up, and sellers are offering concessions. So use those seller-paid buy-downs and incentives to bridge the affordability gap and lock in a deal on your terms. Wherever you're at in the process, my team and I are here to help. Let's connect. We'll make a game plan. Regardless, stay informed, stay ready. As always, be the Buffalo. I'm your friend in home finance, Andy Tuttle. Thanks for watching. I'll see you next time.